After over 40 years of doing this, one of the things I love about Money Talks is getting a chance to talk to some true experts. And Tony Greer is right at the top of my list. He founded TG Macro, by the way, in August. I think it was 2016. But the thing was this, independent research firm, but he got to combine 25 years of trading, 15 years of writing a daily newsletter, and he put it on the one platform. And I can't tell you how important I think it is to obviously have the analytical background, but to have the trading background that creates a whole bunch of other things. I mean, I hate to use things like feel, for example, but recognition. I've seen that pattern before. I've been in this story before, all of those kinds of stuff. So he takes this fundamental approach, a technical analysis approach, behavioral analysis, and looks at the big picture and drills down into what he thinks his subscribers should be doing. Tony, thank you for finding time.
Mike, I'm always honored to be on your show. It's great to see you, man. How you doing?
I'm doing well, thanks. I'm doing well. Better for having you on. As summer hits, though, I'm always happy. The warmer
Yeah.
weather's finally hit, and everybody kind of lightens up in a better mood.
Yeah.
It's interesting with the markets, though, too. Look at this huge sea of uncertainty that we're looking at. One of the things risk factors. Well, I mean, what's going to happen in the presidential election would be an easy one, but geopolitically has me worried, and whether it's Ukraine, whether it's China, Taiwan, whether it's Gaza. So that's out there. We've had a really interesting move in the market that I know at TG Macro, you guys and the Navigator have been on top of. And let me start with that. I mean, look at NVIDIA. I mean, come on. That's one of those stocks you look at and you go, God, I wish that I bought it on the IPO. What was it, 1999? I know you've written about that.
Yeah. Well, it's up 590,000% since the IPO, but it's had massive drawdowns since the IPO. I think one of them was 70% from high to low, right? And nobody can live through that, So the idea that you could have been in it was interesting to entertain. And, those aren't really terribly accurate. But what's cool about NVIDIA now, Mike, is that your muscle memory is waking up if you live through the .com bubble, right? Because we've got stocks going to irrational levels for the sake of going to irrational levels, because that's what securities do. So we just had NVIDIA take out the market cap of Apple and Microsoft at 3.3 trillion after it splits 10 for 1. And then just today, as we speak at 2:00 on June 20th, has shown the potential of having an outside day in NVIDIA, right? Where we open up at a new high, carve a new high, and then settle below the previous day's range. Now, the jury's still out on whether it settles below yesterday's low, which is around 130.5. But your muscle memory is waking up from this, because this is how tops form. Right? When we've got the 10 for 1 split, we've got everybody in retail following this thing, piling in. Everybody's piling in for every reason under the sun. And now we've got this outside day, which oftentimes shows a technical reversal. And we may see NVIDIA go sideways to lower for a little while now. Jury's still out on that, because there have been a couple of outside reversal days down during the rally. So you can't necessarily say that this is the top either. But it's really interesting now that we've eclipsed the market cap of Apple and Microsoft, and everybody is remembering back to the 2000 .com bubble when Cisco, briefly was the biggest stock in the stock market and then collapsed from there. Right. So, history usually doesn't repeat. It does rhyme. And this may rhyme a little bit and it may rhyme a lot, right? It may be the peak in NVIDIA and it may be a 20% pullback, and you've got a chance to buy it at trend support and then it's gone again. You never know. But when markets get to the sort of absurd levels super quickly, you would think that this is an opportunity for the tradable pullback. And if we've got Mag 7 leading everything and taking up such a huge portion of the S&P, we may finally be, for the first time since I went bullish on November 14th and then upsized my bet, we may be at a little bit of a tradable tactical turning point. And that is if this turns out to be the big one in NVIDIA. There's 2 hours left. We'll still see. But that's how I'm looking at the tape, Mike.
Well, it's interesting, as I said right at the outset, having that kind of background, 25 years, 15 years, you've been in that game a long time. And I do remember the 2000s. My best advice, Tony, nice little anecdotal story. My best advice, my business partner, God, he had a gift for just not getting too much information in his head and he'd just buy something. So he owned Nortel and he happens to phone me. And I said, "Do you still own all your Nortel?" He says, "Yes." I said, "Hang up, never phone me again till you sell it."
Oh,
And it was about so we got 11850,
oh,
close to the top. And but I had been writing about that too. I said, no, this is insane. When I think no, was it 3Com that owned Palm Pilot? Anyways, Palm Pilot was worth more than 3Com, which is of course ridiculous.
yeah,
But I told him to hang up, and of course Nortel went to zero. And I bring that up though to remind people how abrupt the moves can become. When the
yeah,
air comes out of the balloon, and as you say, if you've been around, you sort of go, oh, it's getting
yeah,
pretty enthusiastic out there. And then the old question is, who's left to buy? The
right,
10-for-1 split brought a lot of people in, and I think that was understandable. It's more affordable, feels like it's more affordable at least. And you go, well, who's left in this parade?
yeah,
Who is there anybody even negative on this parade? So
yeah.
yeah, it's just interesting that you say that. I mean, the whole semiconductor industry, which you've been writing about too, has been fascinating.
Yes, I'm writing. I'm no expert in semiconductors, Mike. Let me start with that. But
Hmm.
I know we know what's leading the sector, and I do watch the sector, and I've watched it, trade, lag Nvidia, and then I watched Nvidia lead the way. And it's been interesting how the dynamic changes. And it was funny to see post 10-for-1 split, we saw Taiwan Semiconductor take off to a new high. And
Yeah.
so semiconductor sector was kind of outperforming Nvidia for the last couple of days, which was really, really weird. And so it's interesting to see now all of a sudden Nvidia's got this big, huge bar range now that could be an interim top that we might be looking for if the close turns out to be that way. But it's just interesting to see how that pans out versus the semiconductor sector. And all I'm saying is, like, I look at the semis like any other sector. Like, I look at it like pattern recognition. Like, that's
Hmm.
breaking out. It's following this thing. And these have shown no signs that they're at a top yet. So you got to kind of just stay with the idea that they can still go up until they demonstrate the ability to go down. And that's why I have my kind of nuts and bolts analysis of carefully screening performance at
Yeah.
the end of every day, week, and month. Because if you look at the performance of NVIDIA on every, across all the whole spectrum from every day, week, or month, it's only been in the green, right? Double digits, up double digit percentages. And by how much is the question. So eventually that thing will start to put in a few negative down days in a row. And then it will have its first negative week in however many
Yes.
weeks now, and then all of a sudden it'll have his first negative month, and then you'll see like, oh, I think I see what just happened.
Yeah.
Right. So we'll see if that transpires. I'm not saying we're there yet. I'm just saying that the opportunity is, the door is open right now, which is a door that hasn't been open at all for months. So that's why I'm kind of really keyed up and excited about it while I'm talking to you here. I've got a position in it. I've been trading it like a maniac, and it's been a lot of fun, but that's my muscle memory from trading in the
Hmm.
dot-com bubble waking up.
Let me switch gears for a second. You know, you've been following the oil market and and of course the ETFs on that. Just give us your take on the oil market these days. I mean, we had that dip,
Yeah.
and was it significant? Was that a buying opportunity? What's the market telling you about that at this point?
Okay, so the dip to me was when we priced in, we had rates falling off of their peak because we had to price in a bit of sort of non-existent inflation
Hmm.
again, right? And we had a little bit of a slowdown in manufacturing, and I think we had kind of weak employment data the last time. We just had an airball in CPI and PPI, right? So that inflationary sting has been taken out of the market. We just had U.S. 2-year notes back off, from the high yield of around 5% to 4.75 during that pricing in of deflation period. And during that period, what happens is what I call deflationary hocus pocus,
Hmm.
right? And that's where nothing that you buy changes in price. Your grocery bill doesn't go down, your gas bill doesn't go down, your education and your healthcare bill is not going down. Commodities are going to go down for a little while because rates are backing off the highs, right? And if the Fed is leaning towards doing nothing, but they're talking about a potentially data dependent rate cut being next, right? So that takes a lot of the sort of sting out of the bond market. And that to me is one of the positive catalysts of the equity market. If there's no downside risk in the bond market, as in dislocation risk on a huge inflation number, the stock market loves it, right? Sideways rates, not too much inflation, not too weak a GDP, and not too weak of unemployment data, but we're kind of right in the middle, and the Fed can stand there with their arms folded. So that's been my sort of thesis for what's going on. So that is why oil backed off. And sorry to go into that. I just wanted to give you the explanation for that deflationary idea. So that's why oil backed off, and it backed off into an abyss where it kind of put everybody to sleep. And I think, as we tiptoe towards a sort of shakier ground, and I'm no global political expert, but now we've got Russian ships off the coast of Florida all of a sudden. You know what I mean? And I feel like the oil market has been in a sort of orderly march higher as that has ratcheted up, right? And we also had this thing where the spreads collapsed into steep contango when oil backed off this last time, when it bottomed at around $70 or so, right? So the spreads got blown out sort of probably artificially weak with that move. And then right into the last rollover, we had the opposite move happen where all of a sudden front month went streaming into backwardation. And that's kind of going along in the background as price rallies. So the market's tightened up considerably. We've got, a little bit of conflict going on all over the place. Like I said, you can read the papers about the global political setup. You know what it is, and you can explain it probably way better than I can. I just know what's going on in price. And when you see, we've just got some more data today that showed us that like global gas demand is still firing. Local gas demand is still firing. So like, that to me is the offset for those recession fears. I don't really start getting worried about recession unless gas demand really falls off a cliff and energy prices are tumbling kind of thing. So that's kind of what we're feeling out now, and it looks to me like oil is, still marching higher towards the, mid 80s. And I think it feels like it's in that mode where it's maybe wants to be one headline away from 100 bid again. And we're hoping that doesn't happen.
Yeah. By the way, I just love, and I just want to come back on something. As you said, you hear the story and then you look at, is the price action reflecting it? I just think that's such a key. And again, the combination of sort of the analytical background and the trading background. But, I think that's just a wonderful key to, okay, well, let's check out if the market's agreeing with the story I'm hearing. I'm hearing a story every day. Is the market agreeing?
Yeah, exactly. When we saw, with rates backing off, we saw gold back off, copper back off, oil backs off with it. And, you take a step back and you're like, okay, this is sort of, the market pricing in a little bit of an econ slowdown, right? That's what the data is saying. This makes sense. And then all of a sudden it's like, war drums here, war drums there, but and all of a sudden oil 75 bid, 78 bid, 80 bid, and you're like, wow, this is following that narrative now to me, and maybe I'm totally wrong, and maybe that's not really what's driving price. But if I can make the excuse that those things are going in lockstep and I can trade it that way, then that to me is what's happening.
Let me come back. I should have actually introduced you with this because you've done a lot of, really important calls. But I want to come back to, you were the guy who put me onto it, November 14th. All of a sudden, you were sensing the change, at least in tone, of Jerome Powell, and that became more apparent later. But you were and went bullish, and then you've gone even more bullish. I don't know, how do you want me to put that? Got even more committed, but made it very clear that you were all in. You told your subscriber, November 14th, I'm in. You re-upped that, and so when somebody's had their finger on the pulse like that, I think it's important to ask, what do you think now? I mean, I know I'm talking to the general market at this point, but that's what you were talking about. And of course, you break down to individual groups, but that's what you were talking about. So, I don't know. I'm just throwing it off the top of my head. I can't think of anyone else who was that aggressive at that time with that specific, because people have to remember, boy, we were talking about a whole bunch of other stuff, but we certainly weren't arriving at the conclusion now is the time.
Something big changed, Mike. Something big changed in the narrative, in the data, and the market sent off Roman candles all over my screens all in one day.
Mm-hmm.
Right. So it was really not me being brilliant. It was me just reporting what I'm seeing.
Right.
So on that day, if you remember, that was sort of we were battling our way out of some hot inflation data, right?
Yep.
Inflation had been, kind of heating up quite a bit again in a resurgence sort of after we got it off the highs, right? So it starts sparking up a bit. And we got data that day, headline CPI, that was literally nil. I think it was like 0 versus plus 0.2 expectations or whatever. But the market sent a signal like it was saying to the world, okay, inflation, not an issue anymore, completely irrelevant.
Mm-hmm.
Because there were 2 and 3 standard deviation moves in the treasury market. And when that happens, you better sit up in your chair no matter what else happens, right? So maybe nothing else happens, but if there's a 2-3 sigma move in the treasury market, I am out on the front of the boat, like looking for what is going on. So we saw that day. We saw multi sigma moves in the FX markets,
Yeah.
right? Rates went lower, dollar went lower, stocks erupted. There were 17 sectors of the S&P that had 2 sigma rallies that day. Now, if you follow this shit like I do, you know that on a daily basis. Let's see, like today, let me just look at this, because here's the interesting part. So today there are 5 stocks with multi-sigma rallies, right?
Yeah.
On some days there's several stocks and maybe 1 or 2 sectors that have a 2 sigma rally, right? Like a really outlier percentage move. On that day there were 17 sectors that registered moves like that, right? So I'm sitting here at the end of the day looking at my screens going, what the flying fuck just happened? And what that is the market decided.
Mm-hmm.
That's not a portfolio. That's not anybody blowing up. That is a market decision where the market has got a fuse on this inflation story. And all of a sudden, the economic data comes out and says no inflation, and the bomb goes off.
So when you look at that today, what are your readings telling you now? I mean, we've had that move, as I say, you called it. And I think it's interesting your point about you read it, if you know what I mean. You
Yeah.
let the market direct it. But
Yeah.
what's the condition of the market now? We've had, monster moves. I guess I'm saying that because everybody starts worrying about there's going to be a significant correction. And I'm not asking you to put a crystal ball out. It's what the market's telling you about that. I mean, it's on the radar, but the probability, has it gone up there? What have you?
Yeah, it's a great, it's totally fair to ask where am I now, right? Because I
Yeah.
recently, as you mentioned before, I recently went to a table max bet on the S&P, I called it, right? So I
Yeah.
was long for since November. I've got almost 1,000 points in it now, and I'm looking for the next best trades, and the next best trades are turning up to me to just be long the S&P. And there's a
Mm-hmm.
couple of reasons behind that. To give you the 2 short reasons is, number one, I think that we are in the middle of the 95, 96, 97 analog, where in 94 we had rates going higher to cool off a strong economy, overheating, inflation data, strong GDP, reached a high in Fed funds of 5.5% in 94. Stock market was down 1.5% after a really volatile year. That's like last year. And then coming out of that, rates were sideways to lower, and we had all these tech tailwinds, right? That was the
Yeah.
first internet boom. So that's the first reason that this looks similar to me, right? We just battled the inflation beast. We saw rates make a high. We are not going to, the Fed is not going to allow that brand of inflation to enter the picture again. Rates are likely to be sideways, in my opinion, which is a longer story. But this to me is what's
Mm-hmm.
bullish the stock market, right? So we've got bullish conditions for a multi-year rally, in my opinion, with AI being the new tailwind in tech. But we've got this situation where AI, i.e., NVIDIA and the Mag 7, look like they're vulnerable to a pullback. That's fine. When the pullback happens, I'm going to stick to my guns. I am not going to leave my feet, as you know, when you're playing basketball and somebody throws a head fake. And I am not going to fall for the market crash bullshit. And I'm going to find a better place to enter the market, because this is what's going to happen. Eventually, NVIDIA is going to have its Icarus print. Right? Happens to everything. Has a big Icarus print, big range. It may be today, maybe next week. I don't even know where it might be from. But eventually that's going to reverse, and it's going to revert to the mean, because that has to happen at some point. When that happens, there will be a correction in the stock market. It'll probably coincide with higher rates, or just rates ticking back higher. That will be something that is a headwind for tech. Tech will have a massive pullback into trend. While rates are going higher, you'll see natural resources perk up. And so natural resources sectors of the market, like the equity E&P, like the E&P stocks, like gold miners, like industrial miners, refineries, those will start rallying again. And the S&P won't collapse. It'll just have a big giant pullback where tech is in the lead on the way down, and maybe some of the other interest rate sensitive sectors of the market. And the inflationary hard assets is where all the money flow gets parked for the next couple of weeks, months, quarters, whatever it turns out to be. So that's how I'm going to play this, man. I'm going to stay bullish. I'm going to pick a spot where I first get out of my table max bet.
Yeah.
And that'll be when I think that the Mag 7 have turned and need to pull back. Haven't really seen that yet. If today is the outside day in NVIDIA, maybe it's today. Got another 2 hours on the tape. But I'm going to adjust accordingly, right? We'll take the table max bet off the table. Maybe we'll be flat the S&P again. And we'll find a better place to get in when everybody's talking about the big crash that's coming. And I don't see that coming for any reason at all. So
that's a wonderful summation, by the way. And it's how a professional approaches the market, though. No, it's important and answers exactly what I was wondering about. And, and I want to tell people, of course, you are the editor of the Morning Navigator, but you can find Tony at TG Macro, on X. But I'm not letting you go yet, because I got one more question.
I'm not going anywhere, Mike. For you, I have all afternoon.
Oh, that's fantastic. But just a quick take on gold. Now, I know you park it, and so you're not influenced by what you're seeing in the market. It's sort of forgive the word, an insurance policy.
Yeah, exactly. That's kind of how I look at it. I do have a trading position on, right? I've got Fizz on my pad in my view matrix. I'm time stamped to when I put it on years ago, literally. And I have no intention of taking that off either. Yeah. Right. That's kind of a core position that's got to be in everybody's sort of human portfolio, if that's fair, in some way, shape, or form. So, yeah, we've got the physical. Let's put that to one side and talk about the trade. Right. Gold. Now, what we got to do, Mike, is switch gears from talking about semiconductors and NVIDIA. And we got to slow the truck down. Right. We're talking about gold now. It's a slow moving, barbarous relic.
Yeah.
Right. But what it is doing, in my opinion, is checking all of the boxes for a multi-year breakout as well. So I don't mean to be like salivating over it too much, but my two most bullish views are the S&P and gold. And so now we're talking about number two. The breakout through that triple top at 2080 has been textbook. Right? Take the timer and throw it out the window for a minute. Just forget about how long ago that was, right? I would have loved to have seen it get to 3,500 by now, to be quite honest with you. So I'm tempering my expectations, and I'm just playing this 2080 breakout like it's going to rally for another year or two, because we had 2 years of rallying in 20 and 21. We had consolidation in 22, 23, and into 24. And then we had the breakout early in 24. And when you take a step back and you see that gold rallied for 2 years, consolidated for 2 years, you could easily see with this technical breakout and the reasons that are behind it, I could see gold going into a multi-year bull market again. A slow moving one, that may
Mhm.
only tack on 25% to the price and get it to 3K, 3,500 at the end of it. But to me, it's checking all the boxes and making all the right moves of everything that it has to do. Central banks are buying it. It's kind of a fade to the whole fiat currency losing purchasing power as the West borrows itself into oblivion, right? Like it's
Mhm.
just a natural investment home for your dollars, right? If money goes where it's treated best, it's being treated pretty damn well in the gold market lately. And it's being even treated pretty damn well in the Bitcoin market lately,
Yeah.
right? That thing got back up to 70K and looks like it was going to curl over 4 times and does not curl over anymore. So maybe that's another thing that's expressing, kind of displeasure with the rate of the Western borrowing and things like that.
Yeah.
So that's kind of how I frame gold, if that's fair.
No, it's a great explanation. Look, time's up, but I could go on all day. But here's what people can do: they can go to at tgmacro.com. Everybody, we'll put all that stuff on all our info, but tgmacro.com. The Morning Navigator, great reading. I highly recommend it because it gives you can hear with Tony's analysis. I mean, there's so many different moving parts in the market, but you get the advantage of decades of experience here in both trading and analyticals. And it's just, I just think it's such a key time. You always say now is the most difficult time to invest. Well, that was on the stock exchange when I was a kid down in New York, but boy, it's never been more true in my opinion. And being positioned in the right groups, positioned in the overall market, understanding what's going on. And Tony, you do a brilliant job. It's really worth my while. And I don't say that casually. I got 40 years plus. So when something's worthwhile, it's worthwhile. Tony, thank you for finding time for us here on Money Talks.
Mike, I don't take that compliment lightly from a guy like you with your experience. It makes my day every single time I hear something like that. So thank you very much for giving me a platform to speak in addition to my writing. So you're the best, man.
Thanks very much.